where we're going to talk the business of selling petrol. ADNOC Distribution, they are the petrol station people, have seen Q2 net profit and revenue rise by more than 70% each. Very pleased to welcome back into the studio Matt Stanley, who is the partnerships lead for the Middle East at Kpler. Matt, good morning. It's nice to see you.
Morning, Brady. Good to see you too.
Okay, I'm going to start with a basic question. You're going to be polite and pretend it's not that basic.
Sorry, go ahead. Sorry, I'll let you ask the question then.
I mean, we can swap if you like.
Sorry. Okay.
Why are petrol stations making more money? Is it just that petrol has gone up whopping amounts this year, or is it more complicated than that?
Look, I mean, it's a couple of things. They're fair questions. One, ADNOC have done a stellar job in terms of their growth. ADNOC Distribution have added, I think, 20 retail stations this year across their network. And yeah, look, the story of the year so far is obviously energy prices, high oil prices, people concerned about demand. But look, so far this year, demand for gasoline at the retail pump is up about 10%. ADNOC saw. Look, in essence, gasoline prices hit the roof in June. Refining margins, as we call it, which is you put a barrel of crude oil into a refinery and the price of that product you want to yield coming out is hit a record high, especially in the States. We all read the Daily Mail. Other papers apparently are available. But look, since June, it's come off 40%. Crude oil hasn't come off that much. It's come off about 20%, so it's not linear. But look, the story of first half of this year was $485 million of profit for ADNOC Distribution, which is great, and they continue to grow forward.
Why is it not linear?
Well, as you said, it's the issue. The issue is there are two issues. One is the market is concerned about the supply of crude oil because of the issues that are happening in Eastern Europe. People aren't so sure whether the latter half of this year we're going to see that supply crunch. And then the second issue is inflation has gone through the roof. People have been out spending. And this is the kind of the market that we're in. We're kind of in this sort of non-schizophrenic market that is facing a recession. But then you see job numbers that came out of the States on Friday, which completely baffled most people. So, look, at one stage last week, I thought the gloves were off on crude. We were going down to sort of $85 a barrel on Brent, and then, like I said, the brakes hit. The handbrake was pulled up because of job numbers, and back we are to 96. But in essence, people are still spending. People are still flying. Airports are still busy. So, but ultimately, it's driven from sentiment within Wall Street, effectively, and they saw last week that recessionary headwinds are just too strong, and just sold off most asset classes, especially refined products in the US. So, yeah, it's still this push and pull between supply and demand.
Before we get into that push and pull, another basic question. Is it simplistic to think that just because petrol prices are going up, the people selling it are having a good day? Around the world, who gets what out of a litre of petrol?
Well, if you've got an integrated system like an ADNOC, or you take the GCC core like Saudi Aramco or Bapco in Bahrain or wherever it may be, the system is we produce it, we refine it, and then we sell it. And that's we see that. So when energy prices are high within the Middle East, we benefit because we have, like I said, we pump it, we refine it, and then we burn it as the retail. Elsewhere in the world, say the UK, excuse me, it's a little bit more controversial shock because majority of the retail price is made up from tax. So you have people middlemen who get involved, so the trading market gets more established, which is in the Far East and within Europe. But in essence, if you've got an integrated system like we have here in the Middle East, then prices, we don't feel the pinch as much as other areas do. Even though we follow where global prices are going, we are sheltered somewhat from the volatilities that other areas of the world might feel.
Have we seen what people like yourself like to refer to as demand destruction, and the rest of us just call people buying less, as a result of higher prices?
There is always an element of that, and the problem, the issue with higher prices are higher prices themselves. If people who are running a business model where their main ancillary cost is fuel, then of course it's going to hit bottom line because you can only provision so much at the start of the year for where you think energy prices may go. You take the Taliban example here as a perfect example. High energy prices, then of course it affected the drivers. It's a ever changing dynamic when it comes to energy prices and how you can define demand destruction. But in essence, it's been an approach to a recession like I've never seen. You know, a low unemployment globally, people are still going out there and spending money. Inflation is multi-decade highs, but demand destruction themselves, we haven't seen it. In fact, take jet fuel as a perfect example. There's more demand and then there is supply.
Oil, as you mentioned the seesaw there between fears of a recession, so not enough demand, and fears of an energy crisis, not enough supply. Who's right?
I don't think we know yet, and I think that's an excellent question and one that I think the whole world needs to address. Look, when you're baking on a beach in Bournemouth and it's 38 degrees, you don't think about, am I going to be warm enough?
I went to university in Bournemouth, Matt. No one is actually baking on the beach.
Well, no, but it's stony, so there's not much you can do. But
wind breaks everywhere, Matt, as far as the eye can see.
Yeah. No, it's a lovely part of the world. You don't worry about when you're sort of building sandcastles how warm you're going to be in the winter, and it's this issue that we saw late last year where it gets to a point where I better put the heating on, and then suddenly there's no gas to fire up the boiler. That is really going to be what's going to drive energy prices later on this year, and it will be felt globally because if the EU doesn't have enough energy, it will pull energy sources from other suppliers, and they're doing that right now to a certain degree by taking some of the LNG, the liquid natural gas from Asia. But in essence, that's the fear, is going to be gas driving up the whole energy complex, because we simply don't know yet the impact that a lack of supply when sanctions kick in from the EU bloc. They're already in place within the US and the UK. But when that really starts to hit home, where the supply-demand balance will be. My fear is that there won't be enough and that prices will continue at these levels, even in the wake of a recession come Q4.
Continue at these levels or go higher? I mean, you're a numbers guy. What are you looking at?
Yeah, but I'm always wrong. So, not a great numbers guy, really. No, look, it's what do you deem as high? When we were at $139 a barrel in March, that was high. We're at 96 now. Even in the face of people with this massive sell-off, that we're in a recession. Technically, we are, I suppose, but not within this region. But certainly in the US and the UK, for example, fundamentally the markets will always be driven by sentiment. Supply is a concern, and that will drive up prices come Q4 with the lack of gas that the EU will see.
I've got 30 seconds left with you, and we're not letting you out of the studio without a price prediction.
For when? For what?
Short to medium.
Crude?
Yeah.
120 by November.
Matt Stanley, thank you very much for joining us this morning. It's a fun game, everyone can play. Partnerships lead for the Middle East at the energy data company Kpler. And this morning on the back of those numbers from ADNOC Distribution, they have seen Q2 net profit as well as Q2 revenue go up by more than 70%. If you do want to get in touch with us this morning, if there's anything you want to discuss, 4001 or use the Messenger app.
Dubai Eye 103.8.
Join the conversation.